Last night, Franco-Nevada was delayed in releasing their second quarter 2024 financial results, posting them an hour and a half behind schedule. And there was probably good reason for that. The quarter, to be frank, was a bit of a shit show. The loss of a major royalty due to political activism in Panama, poor production at two key assets, and higher taxes due to a new global minimum tax initiative all contributed to a weak performance on a year-over-year basis. In summary, the results were less than stellar. Let's dive in. The second quarter saw Franco-Nevada sell a total of 110,000 gold equivalent ounces, which represents a decline of an eye-popping 35% on a year-over-year basis. This appears to be attributable to a poor performance all around. While much of the decline can be blamed on the loss of the royalty at Cobre Panama, which was largely due to local activism that drove one of the world's largest copper mines into care and maintenance, it wasn't just simply this factor that took down Franco-Nevada this quarter. Excluding Cobre Panama, gold equivalent ounces sold still declined by 16% on a quarter-over-quarter basis. The only commodity in Franco's entire portfolio that saw improvement on a year-over-year basis for the second quarter was iron ore, which in GEO terms improved by less than 1%. The saving grace here for Franco-Nevada, however, was the price appreciation in commodities that we've witnessed over the last 12 months. Despite a 35% decrease in GEOs sold during Q2, revenue decreased by just 21% to $260 million. And excluding the impact of Cobre Panama, revenues actually increased by 1%. But sky-high gold prices weren't enough to stem the losses of this royalty giant. Net income fell to just $80 million, or 47 cents per share, falling far short of analyst estimates of 82 cents in earnings per share, while dropping 57% on a comparable basis to the year prior. Adjusted net income came in at $145 million, or 75 cents per share, which was a decline of 21%. Adjusted EBITDA also fell by 20%, coming in at $222 million, or $1.15 per share. All this resulted in a decline of operating cash flow by 26% to just $194 million. So what caused all this? Well, the primary cause appears to be the loss of the Cobre Panama royalty, which we already addressed. To give it some context, Cobre Panama in 2022, before things started to get messy, accounted for $223 million in revenue for Franco. That's nearly a full quarter's worth of revenue today. Franco spent $1.36 billion investing in the asset, which was expected to generate income for over 30 years. So much for that. Elsewhere in its portfolio, Franco-Nevada saw production come in lower than expected at both the Candelaria and the Antapaccay assets. Candelaria is the result of stockpiled ore being mined due to the interface of open pit and historic underground mining stopes, with higher grade ore expected to be processed in the back half of the year. At Antapaccay, a geotechnical event is being blamed for limiting pit access, which is expected to be resolved in the second half as well. Then there's also the OECD's Global Minimum Tax Initiative, which basically amounts to Western countries demanding that corporations be forced to pay at least 15% in taxes after seeing so many corporations leave their borders for tax havens. This impacted Franco-Nevada by $70 million in additional taxes. Finally, to close out the earnings report, Franco-Nevada informed shareholders that it now expects to come in at the lower end of its guidance range in terms of gold equivalent ounces sold for the year. That range sits at 480 to 540,000 gold equivalent ounces. The company here is caught in a bit of a catch-22. While the elevated price of gold has saved them in terms of revenue, in terms of gold equivalent ounces, the result is that it takes a lot more of any other commodity, i.e. silver, iron, oil, or whatever, to now make up a gold equivalent ounce. Franco also isn't slowing down in terms of acquiring new producing assets. And just in time with the earnings, the company revealed they had paid $210 million in cash to obtain a 1.8% NSR on Newmont's Yanacocha mine, adding an immediately cash-flowing asset to the portfolio. The company earlier this year also acquired a 2% gross production royalty on Scotty Resources claims in the Stewart Mining Camp, a gold stream from SolGold's Cascabel copper gold project that is expected to contribute 50,000 gold equivalent ounces a year once operational, and they also entered into a number of term loan agreements. Despite the recent struggles, at the end of the day, Franco-Nevada is going to be just fine. This is a company with 117 producing assets in its portfolio, 41 up-and-coming assets that are in advanced development, and 273 exploration stage assets. They might be on the lower end of guidance for 2024, but big picture, they're still aiming to produce between 540 to 600,000 gold equivalent ounces in 2028. In other words, despite their size, they're still growing. And they seem to have a degree of confidence in their future success too, with the company recently hiking its quarterly dividend to 36 cents a share, their 17th annual increase. Yeah, this quarter wasn't great, but not every quarter will be. All right, everybody, thank you for watching. If you enjoyed this video, please let us know. Are you long Franco-Nevada? Are you short? Are you thinking of going long? What mining companies do you like? All right, everybody, thanks for watching.